Morning, everybody. Welcome back to the Opportunistic Trader. It's just after 10:30, and we on November 28th, and we're joined by Alan Hill of Treasury Consultancy. Alan has been joining us regularly to talk about Brexit and the FX market. How's it going this morning, Alan?
Hi, I'm fine, thanks. Yeah, no problems. Good.
So we've had a lot of Brexit news. The pound right now is at 127.70. Catch us up. What's the latest, and what are we looking for?
Well, fine. The latest on the pound is that I think that the market is probably as short as it can possibly get without any further major news. We got the agreement signed at the weekend that the EU have accepted the terms that have been negotiated between the two parties, and that, as far as they're concerned, the deal is done. There were a couple of late last minute hitches. Spain was pretty predictable in that it tried to force some sort of change in the UK's attitude towards Gibraltar, which is a British, I don't know, governed island literally attached to Spain, and Spain has for centuries been trying to get it back from the UK, in much the manner of Hong Kong was, but has always been unsuccessful. And they were just trying to see if they could put more pressure on the UK. That didn't work, and the agreement was completed. Now, as far as where we are now, Mrs. May, the Prime Minister of the UK, has been assailed from all sides over the agreement, and the likelihood, almost the certainty, is that when the vote takes place in the House of Commons on this agreement, the government were forced many months ago into promising a meaningful vote in the House of Commons on the agreement when it was signed, and that vote will take place on 2 weeks yesterday, on the 12th of December. The latest data on that vote is that government will probably lose by something around, quite incredibly, 200 votes, which means that we will be there at that point stuck in limbo, where the EU see no real necessity to renegotiate. They have an agreement in place, and the UK is left not. Or the UK government is left not having the authority to sign the agreement they have actually managed to get out of the EU. So what happens after that, we really don't know, because this is obviously an unprecedented event.
Yeah. Well, what's your inclination though? Because I mean, I just see it continuing to drag on. I mean, we gotta get some news, I guess, at some point, whether, Europe goes with this, whether, there are a lot of different variables. And I guess they were saying if May steps away, which is not expected, but if she were, that would be a pound negative. What's a pound positive out of all this?
It's very difficult to actually say what a pound positive would be. A pound positive would certainly be that, the only pound positive I can see is that the defeat for the government isn't quite as bad as 200 votes. Now, that's still a negative, but it's not as such a negative. If you're right, it's a double negative, which could equal a positive. But the the only positive really is that the Parliament accepts the agreement. There is going to be no more negotiation as far as most sides to the agreement are concerned. There is obviously a huge backlash against this backstop agreement, where the UK can't really negotiate any new trade deals, or can't influence any votes in the European Parliament without, or European Commission, I should say, without the say-so or the agreement of the EU that we leave. So the UK is kind of stuck in the middle of something it doesn't want to be stuck in the middle of, and to keep saying, as the government have, and even today have said, that this is the best deal they could get, brings you back to the whole original thing: is no deal better than a bad deal? And this, without even Theresa May having to illustrate it very clearly, is a bad deal. My personal view is that there will be the UK will leave the EU without an agreement next March, and if that happens, then there is a certain amount of positivity around that, because there is a lot of bad feeling regarding this deal. And with this deal, it is a yes or no, or you like it or you don't like it, and very few people do like it. Whereas if the UK were to leave next March with no deal in place, firstly, I would say they save themselves £39 billion, which is clearly no bad thing. But they also will then be in a position to renegotiate with the EU a future relationship based more on a level playing field, i.e., the EU doesn't have anything it can hold over the UK to make it agree with certain terms, because the UK will all be out of the EU. So it'll be free to negotiate trade deals. I know your president isn't very impressed with the deal. He says it's a good deal for the EU, but is a real issue for the UK when it comes to negotiate a trade deal with the US. Now, the trade deal with the US is most certainly the most important of the deals that will have to be negotiated, and will probably be a precursor of many other deals which will fall in line afterwards. So if the president is saying there's an issue with negotiating a deal with the US, then that really does put a spanner in the works of the UK's ability to negotiate further trade deals.
Yeah, absolutely. What else is in focus in the FX market here? Right now the dollar euro is at 112.84. Dollar index is basically on a year and a half high. What are you looking at other than the pound?
I'm certainly looking at the euro. I think the euro has put more room to the downside against the dollar. Certainly against the pound, it's kind of much of a muchness. It's trading 113.20 right now. That's how I see it. That's around 80 something pence. But the euro has much further to go because they are in a position where the economy is weakening. Germany actually in the third quarter was actually had a downturn in GDP of 0.2 downturn, decline in growth, which is a very bad sign for Europe's biggest economy. We still have the Italian budget bubbling under, the rise in nationalism. So there's very little actually positive going on for the euro right now, and I do see that there are clearly a lot of issues swirling around the dollar, good and bad, but it's uniformly bad right now for the euro, and I think the single currency can easily reach 110.
Yeah, well, yeah. I mean, it could in the old days, volatility-wise, we could have been there tomorrow. But yeah, recently we've been moving about 40 pips a day max.
Well, exactly, yeah. I think one of the things from that, Mike, is that when you look at the market as a whole, there is clearly much more liquidity than there ever was in the past, and that is something that really does affect the euro. And it's with every tenth of a tick trading, it's very difficult to see any kind of large volatility in these moves. And when you see it that way in that night, then the market is very unlikely to actually be all one way. It's almost impossible for it to be all one way. Whereas sterling is slightly different. Sterling, I think the market is massively short right now, and there are very few buyers out there. Whereas there are always commercially buyers of the euro out there anyway, and that's what has slowed the rate of decline down, and that is what we'll see going forward. But that is the direction for the euro. We see it bounce off the odd point of resistance or support, sorry, I should say. And we have the low for the year as the next one, 112.20, something like that. But if that's broken, then we see 111.80, 111.50, 111.20, 111 down. For me, the euro is very difficult to support right now. Interest rates aren't going up. Okay, they are withdrawing their support their asset purchase scheme, which adds liquidity to the bond markets, but that isn't going to affect the currency so much, and certainly isn't going to give any boost to it. So the euro goes with the pound, as far as I'm concerned, in that same pot.
Yeah, it's interesting. I actually saw a comment yesterday from HSBC that they were talking that the consensus for next year is actually for the dollar to weaken. That they were looking at it as a situation where the dollar, the FOMC is gonna underperform what the market thinks in terms of hikes. So that's bearish dollar, and that growth in the U.S. probably will disappoint as well. And based on they think there's consensus seems to be that the dollar has moved too far. So I found that pretty interesting because we're seeing that at a time when the dollar is basically at a year and a half high, and while those are valid points of possibly the Fed maybe underperforming, not hiking as much as expected, I still think that there are a few things that are in the dollar's favor. What are your thoughts on what are your thoughts on expectation based on where we are right now and kind of positioning things like that?
Well, I would agree with you regarding there are still one or two positives out there for the dollar, and certainly when you look at it as a comparative trade, as opposed to outright look at the dollar as a strong or weak currency, that isn't a valid trade in the market anymore, because everything's relative to something else. So as far as the HSBC comment is concerned, two things. Firstly, I imagine they are talking their own book, and that's what they want the market to think. One. Two, I would say that it also depends exactly when that was written, because clearly the comment from the vice chair of the Fed yesterday and also from James Bullard both were slightly more hawkish than the market had heard recently. And if that's a continuation, and we do see quite strong employment data going forward, and inflation starting to tick up, then the comment about rate hikes being data driven will be exactly fulfillable.
Yeah. Yeah, that it's interesting. We have a lot of things coming up. We have next week we have non-farm payroll. We have Fed President Powell speaking today at noon in about an hour. We have non-farm
Yeah, we had
payroll.
the minutes tomorrow.
Yeah, we have the minutes tomorrow. We have G20 coming up. Then we have the actual rate decision in mid-December. So before year end, there's still a lot to go on in the currency markets, and obviously what we started talking about, Brexit as well. We're going to continue to get a lot more headlines. So it looks like there could be some activity for G10, which we haven't seen a whole lot of this year. There could be some fireworks over the next 5 weeks before year end.
I agree. With G20, of course, we have the meeting between Trump and the Chinese president, and also it'll be interesting to see how the Saudi crown prince is treated in the wake of the Khashoggi incident. Let's say he's there. I mean, I saw a picture of him arriving in Buenos Aires earlier today, so he's there. And I imagine it'll be quite a difficult time for them as well. So yeah, there's a lot going on and a lot to look forward to, I think, before we start our Christmas parties anyway.
Exactly. All right, Alan, I appreciate you taking the time to speak with us. It's Alan Hill, Treasury Consultancy. Check him out. He also writes blogs on our site in the FX blog section. A lot of great information on Brexit and the FX markets. Alan, I really appreciate it.
Look forward to speaking to you again. Thanks, Mike. Take care.
Thanks.